Okay, thank you for coming. Today we're going to look at Bitcoin only. I know there are some requests on the table that I need to get to, but I'm not feeling very well today, so we're just going to look at Bitcoin and I'll have to get back to you on the other requests. Today was kind of a sentiment turn for a lot of people. You're seeing a lot of bullishness, which is something I've been kind of warning against. Well, not kind of, I've been directly warning against for many days now. And I want to look at the charts and see if there's anything different now that would perhaps justify this change in sentiment, or this perhaps in some cases maintaining of sentiment for the bullish side. Right now you're looking at the weekly chart for Bitcoin, and it's pretty simple to see where our top was. Very recently we capped out around 39k. And until recently, we were sort of, not really, but sort of holding a bottom around the 34. If we look backward, a lot of people were expecting this sort of area to be our main range, and that's basically been the case. You can see that we are within this zone right now, but you can also tell that we are at the extreme bottom of that zone right now. So this is a very precarious situation to be in, because the trend has just been down and we are now at the bottom of this previous support block, which is where we've been ranging the whole time. Something I want to point out about that range though, that we really miss if we're looking at the past and not so much at the present, is that most of that range actually happens right here. As terrible as the past several weeks have felt, most of those several weeks, as far as the candle bodies have gone, has been in a very, very tiny range. And today we have rejected out of that range. Well, not today, but this week we have rejected out of that range quite heavily. So now we are at this big past range bottom as far as the candle bodies go, and this is at 32.4 roughly. And so we have to look back and consider, where did we find support really? And I think the answer is not at the candle bottoms, it's at the wick bottoms. So you see all three of these wicks are finding support lower, much lower than where the bodies ended up closing. And we're seeing the same things here. We've already got wicks below, and in this case the most recent wick down beyond this support, we went all the way to that weekly, which is the 28.7. So I know I've been a bit of a broken record about this, but it's just the trend. The trend is down. We can see that there's no buying pressure, right? We have had 0 springs up from where most of this price action has been taking place. In this past range, we had a lot of volatility, very big candles, all the way to the top, and then way down through, and then all the way almost back up, and then all the way down through again, and then you have candles like this where in the same week you're hitting the top of the range and the extreme bottom of it, closing within it, hitting the top of the range, the extreme bottom of it, closing within it. And we're not doing that over here. We're having these really tiny candle bodies that aren't really hitting the tops of the range. They're not these big beefy boys like over here. And granted, the wicks are hitting, the top of the range early on. They're getting close to the bottom of the range early on, but that doesn't really happen so much. Right here, the wicks are hitting the top of the range, but not the bottom. And then lately, we are wicking toward the bottom of the range, but not the top. So I think it makes a clearer trend where this is going, if that makes sense through those drawings that I've got going on here. But you can see very well, like, we don't have any wicks above this in the past month, whereas before we didn't have any wicks below, really like this before, in the preceding month. But way back here in the range we're establishing, the whole time we were in that range, everything was wicking below, everything was going wicking, you know, above or completely to the top of that range. That was a much more volatile range. So where we are right now is much tighter, and as a result, to actually be wicking out of such a very tight range is much scarier, and to be closing below where the majority of this price action has ended up the past several weeks is also very scary. If you're looking at the candles for the past month, I mean, we're on the biggest candle already for this month, and we're only 2 weeks in. So unless the bulls really come back and kind of squish this candle to make it closer to the size that we've become accustomed to in the last few weeks, then this is going to be a very big indicator that direction is, well, it's maintaining, it's not shifting, but it's perhaps accelerating if the bulls are not going to fight back. On the current candle, which is a big chunky boy compared to the past few that we've had that have been really very small. So we can see where our buying pressure is historically. All these wicks show us that our buying pressure is down toward the 28.7 weekly. At the very least, it's in this range below the 3200, and above this we haven't really seen any springs that have sent us anywhere other than this 1 week, which was completely erased immediately by the following week. So I don't think the weekly looks very good. And if you want to see kind of how these ranges are playing out in the daily, you can divide them pretty well like this. There's a little bit of place where you could overlap. If you want to be very clean, you could separate them something like so, where you have a general bottom to this, a general top to this. And then lately, since, what is this, the 20th of June, since the 20th of June, which is about 3 weeks ago, we have not gone into this area anymore, whereas previously we had not really been trading in this area aside from this one little dip. So the momentum that we're seeing is carrying us downward. We were expecting like a very long crab, right? We expected to be up here just crabbing along for maybe a couple months, and that's not really been the case. Yes, we are sort of going sideways, but we're going sideways on a path that's taking us down. And if this were to continue, you know, at an average rate, you're looking, you know, to go even farther down like that. But of course, we don't expect Bitcoin to just remain like very stable for a long time. We expect some kind of big volatility to come in at some point, and the longer we go sideways, the more likely we are to get that volatility. But as far as the bull case versus the bear case goes, it's very, very simple to see that we're not trading up here anymore, and previously we weren't trading down here, and we are now. So it's like a very easy at a glance sort of thing you can see. So to look at the chart that I've actually been referencing the most for Twitter or for just talking about things, I think this is the cleanest chart I have to share. And I talked about, you know, show me where the bull case is and what case can bulls really make. And initially you had this sort of double bottom that came up, and, you know, going sideways out of that, it really gives you the potential for like Dalai Lama. That, if you're not familiar with Dalai Lama, it's basically that. It's like a double bottom that kind of comes out into a runway up. And instead of that, we got like a limp penis formation where you have these two little balls and then just like a floppy wiener going off over here. So very unexciting, not something you really want to see in your day-to-day life. But what I've been saying about this sort of double bottom into just failure at resistance is that if we come back to this level again, I did not expect it to hold. I said that there's, you know, in TA you talk about a double bottom, you don't really talk about a triple bottom. It's not really a thing. And to delay that therefore this huge gap between retests of this as support doesn't really bode well for me, unless in this time like a shit ton of bulls have come in and loaded the order books with buys. But we're seeing that's not the case, because we actually hit the support on this wick already, and we did not rocket off of it. People did not flood in. I mean, we came to here. That's all that hitting the support has done for us. But very publicly, you know, I've been saying, show me the bull case, show me why you're bullish, why are people bullish. There's no indicator, there's nothing, there's absolutely nothing that gives you a bull case. So I wanted to change the way I'm thinking about that problem, and instead of saying, you know, how can you be bullish, I wanted to say, when would I be bullish? You know, what's going to change my mind so that I can look forward instead of just looking where we are now. And I think what would change my mind after coming off of this double bottom and kind of fading the point of control here through the middle, what would really make me bullish is if I were completely wrong about this support. If I were completely wrong about this support and we not just bounce and, you know, stay in the green range, not that, but if we were to come off of this support and head toward this point of control, the black line in the middle, and reclaim, you know, really anywhere in this yellow range on a move up, whether that's a very sharp move up or whether it's kind of drifts upward, but to see this support hold for more than a couple days. I'm not talking like, you know, because we had a support here, right? A little kind of interim support for several days and then just continued to break down. So I'm not talking about something like that where we just kind of hang out here for a little bit. I'm talking about this holding and acting as a springboard to move us upward towards some kind of reclaim of the yellow or the point of control in the middle. And if we can start to peel off from this support, closing candles higher, then I think that's where I would become sort of low time frame bullish. I don't really expect it to happen at this point. Today we saw that there is some buying interest from here because we got this spring into this daily, like some fighting back from the bulls, but it's not very much. You know, we're not closing green right now. Actually, you can see the candle ticking sort of lower as the day goes on. There are almost 12 hours left in the candle, so it's still anybody's game. But to see us coming to this big support that we've already hit twice, and to not really have a great reaction to it, is not inspiring for the bulls. So I'm still a bear until I'm not, you know. This is still the direction until it's not. Even just locally, you can look that this is a very straight line down. So if you're a bull, what you need is to start turning this into something that oh my goodness, you need to start turning this into something that's going to point the other direction. You need that trend break, and you need to spring off this support pretty well. But I don't expect it to happen. I still think that this weekly support at about 28.8 is most likely to be the first real bid by bulls to hold, and we've already been there. That's the ticket. That's the real key, is you can point to this range support with the candle bodies all you want and shout about how this is going to be support, but we've already seen that we're willing to go below it. This is not something that has like held ironclad. It's failed completely down to the weekly already, and there was another attempt in the past on this candle as well to drop it down toward the weekly. So you got these really weak springs off of that, and you failed to break through the point of control. So if we get some really weak spring off of this again, but fail to break through the point of control, it doesn't impress me. We need to really spring off of this and take back that middle section if we're going to be bullish. And of course, you know, you can see just the trend is down, and that's what you need to do to have a different trend. So on the daily, that's what I'm looking for. I'm sidelined a bit right now because I don't want to be in a short in case we do get a spring, and I think it will kind of pull the entire market up. I think if we start to spring, altcoins and everything will spring up too, because people will be like giga bullish to see any relief whatsoever. And I don't want to be on the wrong side of that. So right now I'm not really in any trades, and I'm not really interested to be in any trades until we see how this resolves. If you want to look at the plan, the sort of messier chart that I have, you know, this is basically it. And I keep saying that we should really just remove the word probable from this and call it the accumulation bottom, because that seems to be the thing that's most likely. But if you want to look at the chart that I'm using myself, it's pretty much this. And you can look toward the left side and see kind of where some of these interactions are, but it doesn't matter too much. We care more about our recent interactions, so we can just look at where we are. And so on this, the chart that I actually use for Bitcoin myself, we can see a little bit of what I was talking about earlier, where you have essentially like the previous crab range and the current crab range down here. And the overall macro trend being down has not changed. The idea of sort of a reversion to mean has not changed. We're just moving along this line downward, even though the hard horizontal supports and resists have changed. The direction has not at all. And so you can see a little bit closer, you have kind of these wick bottoms and these candle bottoms that I've just kind of lumped together into a little green support block around 31. And that's what I'm looking for right now. This would be, well, it is already the 5th time that we've come to this support on the daily. And generally speaking, of course, the more times you visit a support, the fewer orders are going to be left there to try and pump you up away from that support. And so we ate a lot of those orders early because people were hoping for a very quick recovery. And that hope is still kind of present around here. But then once you cross into this sort of lower range here, I think you can't really make the argument that people were buying low because they were hoping for a quick recovery anymore. At this point, they're just buying because of these wicks being here in the first place. It's that sort of self-fulfilling prophecy TA. So these sorts of big buys here are different because they extend down to the weekly. And so instead of this being the real big hope for everyone, we can see that the point of what is acceptable to buy has been lowered. And that being the case, with our 5th time visiting this, you know, I keep talking about this double bottom and saying, you know, there's no such thing really as a triple bottom, but there's definitely no such thing as like a 5th bottom where you just take off majestically. It's probably not going to happen. In finance, of course, you can't guarantee, you can't say it's definitely not, but I think the probability is very low that we don't go back to where we've seen our real buying pressure, which is at the weekly. So if I were going to put some bids on the book, I don't have any right now, but if I were going to put some on, I would put one just at least on the very top of this accumulation bottom, and then see how the interaction with that level is going. I'm not too concerned about the interaction level with today's spot, unless it goes back toward reclaiming the previous range in some meaningful way, which to me would mean at least taking this sort of interim support that I have marked here in the dashed line. So that's a minimum for me to start considering a bull case. And right now it's not on the table. So I've been complaining a lot about influencers and kind of posting bullish things without really backing anything up, without having charts or TA or sentiment or anything. And so I want to preface what I'm about to do, because I know it's very risky to put up someone else's Twitter and say, hey, look what this guy's saying. So I want to be very clear, I'm not trying to call anybody out. I'm just giving a couple examples of like the sorts of things that I'm seeing a lot of, both like good and bad. So like don't try to dogpile anyone. This isn't supposed to be shit talking anything like that, but for example, something I thought was good, I want to show you Joseph Young's tweet here. So if you don't know Joseph Young, I believe he lives in Korea and does a lot of crypto reporting on like Southeast Asia and Korea specifically. And he's saying this is why patience pays. Bitcoin breakout this week was very unlikely. Of course, I agree because I've been a bear. Also, too many people were expecting it. Yeah, so he's commenting the same thing as me, that everyone was very bullish. And he says 31 and 28 are crucial, which are very close to the levels that I was just pointing out. So the real thing that I am interested in here is the quote tweet. He says the Bitcoin breakout will come, but not now. And he's talking about the number of shorts going up, the lack of on-chain outflows, and the major levels at the time being somewhat lower than they were when he tweeted this. And warning, of course, not to just be trading a bunch of chop. So I thought this was nice because he doesn't really do too much TA, but he's talking about analytics, right? He's giving a position and he's giving some fundamentals that back that up. So it's nice to see that. The number of shorts, the on-chain outflow, like these are things that a lot of people don't look at, like the open interest and that sort of thing. A lot of us will just look at like order books, or we'll just look only at the charts with horizontals and whatever, and we're not looking at things like on-chain outflow. So it's nice to see somebody who's more like a numbers side of things and backing it up with some sort of fundamental there. And a little bit different example, our buddy here, Crypto Burb, so he posts BTC at lower Bollinger Band support. And if you look at this chart, it's very simple to see that he's marked a range, but he's already talking about these Bollinger Bands. And so basically, if you are familiar with Bollinger Bands, it's a simple idea, right? If you're in the bottom, you probably are kind of bearish, and if you're in the top, you're probably kind of bullish. And once you get to the borders, this yellow being kind of the top border and this light purple being the bottom side, you tend to squeeze toward the middle. You kind of ping pong between these, and it's sort of a flowing reversion to mean model. So he's pointing out that we are kind of at a range bottom while we are squeezing to the bottom of the Bollinger Bands, which is supposed to indicate that we would have some kind of spring. Now my issue with this is that we can throw on Bollinger Bands, and it's not like this fail-safe foolproof indicator, right? So if we want to look at just kind of a rough bottom, you can say that, okay, yeah, you're getting a lot of interaction around this level, and here we have our daily toward the bottom of these bands. My problem with this is that being at the bottom of Bollinger Bands is like, in a bear market especially, is like being at the top half of RSI in a bull market. So if you look at this bull run that we had, look at the RSI. It's overbought basically the entire time. When you're in a bull run, RSI doesn't mean anything. Typically, if you're in like a stable market, overbought RSI would mean that you're going to sell off. But instead we just kind of go sideways, a little dip, but a little sideways. And when you are in this bull run, the RSI just doesn't matter. It stops making any difference. You don't pay attention to RSI that's overbought in a bull run. It's not something that makes any sense. Likewise, when you're in a big bear market, or, you know, if you want to call this a big bear market, in any case, when you're in a downtrend, we'll go with that, being at the bottom of Bollinger Bands doesn't mean shit, right? Look at this. So just being in the middle of this and squeezing toward the bottom of the bands you're expecting some kind of bounce just because you're at the bottom of bands, you're, you know, around support. But we can go back, we can mark like the bottoms of this up at the top and say, okay, well, here we were squeezing the bottom of the band as well. Where's our big Bollinger Band spring? Like, it doesn't always work, it's not guaranteed. When you're going to enter a downtrend, you just ride the bottom of that cloud and you can wick very deeply through that cloud, and it doesn't matter because Bollinger Bands work in very stable markets. They don't work in very volatile crypto markets, and they don't work when there's a sharp downtrend. So if we are going to lose this big support, and like I was saying before, if we're going to just basically teleport to the weekly, then this Bollinger Band isn't going to matter. So if you're looking at this idea from a bearish perspective, then this indicator doesn't really matter. If you're looking at it from a bullish bias, then yeah, you expect it to spring. But that's a bias. That's not really using the indicator the way that it should be used. And my issue with this is not that he's just has a bullish bias. I mean, I have a bias, of course. I'm a bearish bias, and none of us knows the future, so I'm not shitting on him for that at all. What my issue is that I was trying to find this tweet, so I searched his name and bands because I forgot that he had only used BB, and it pulls up this old tweet from 2018, and he's saying very clearly, looking for high time frame capitulation candle drops through lower Bollinger Bands and coming back inside as recovery candle, and that if you blindly long the bottom of these bands, you can be longing into a fake out. So he completely understands how the bands are used. It's not like an indicator he doesn't understand. He completely understands that this sort of shit happens. That if you're looking at capitulation, if you're looking at a bear market, what you're going to have is a bunch of wicking through the cloud. And he even posted examples from very old Bitcoin charts. But you're not going to just bounce off of these. Like, it's not a 100% indicator. If you're going to be bearish, it's possible that we could just have like a leg down here and be really posting wicks through the bottom of this cloud the whole way. So that's kind of my issue with a lot of influencers right now. That's what I've been warning against. If you don't know how the indicator works yourself, don't just take their word for it that that's what it means. I think we all pretty much understand very well horizontals and, you know, basic trend lines. But when you start to get into things like Elliott Wave and Gann fans and Fibonacci's, Bollinger Bands, whatever, you know, this sort of thing, if you don't really know how it's used, you can't trust someone to really be using it without a bias. And again, I'm not trying to shit on Burb at all, because I have my bias too. And that's why I try to only post my public charts with like horizontal, because those are pretty neutral. You either look at it and agree that the line should be there, or you think it's in the wrong place, and that's about it. But something like Bollinger Bands is a little more confusing, a little more advanced. And so to see that he completely understands that capitulation drops go through the bands, right? And that if you long the bottom of a band, you can end up in a fake out. And to see that, you know, there are examples on his own page of this happening in the history of Bitcoin, in, you know, even going sideways or going into down from a bear trends. You're looking for, he's talking about specifically capitulation, but he understands completely that these can just fail like way out of the cloud, and it's normal. So to see, you know, something like this where he's just saying, oh, it's at the lower bands, implying that, you know, without saying anything directly, because of course you don't want to be publicly wrong, you can say, oh, I never said it was bullish or whatever, but that's the implication. Like, we're not stupid, we can see that. So you've got to protect yourself. Like, if you don't know how the indicator works, either try to look up a crash course or just don't take it for too much more than it is. The most reliable things in TA are basic horizontals and volume profiles. Volume profiles, of course, take like a lot of work to really learn. So if you don't have the time or the drive to do that, then sticking with the horizontals is something you want to do. And, you know, there's like plenty of stuff out there to try and learn from. Like Burb produces materials now and then like this that are somewhat confusing if you're very, very, very new. But I think you can look at this sort of thing, this sort of educational material, and really learn something from it. Some are much easier, more approachable than others. Like, I know what all of the stuff on this chart is, but I don't know what the fuck I'm looking at, right? Like, do I start up here or do I not because it's gray? Should I start at like the black? Is this like a footnote that I should read before I'm totally like overwhelmed by this because my brain is very small. But you guys are big brains, so you can figure out this sort of educational material if you want to learn more about TA and everything. But if you just want the very basics, just stick to the horizontals. Something like RSI, very simple to understand. If you're in the bottom half, then you're bearish. And if you're in the top half, you're bullish. It's not like you don't have to think about springing off of oversold or something too much when you're first starting out. That's something you can learn later on. So that's still my bias. My bias is just the trend. There's no arguing with the trend. There's no speculating on the trend. It is what it is. You can draw one line on the chart and see it for yourself. There's nothing coming out of the Bitcoin universe that is like great news. The Chinese miners aren't coming online tomorrow. No, Apple is not buying like $3 billion of Bitcoin or something like that. So we have the same situation today as yesterday, only today we have the opportunity to play bigger support than we have had in the past few weeks. But if we don't do anything with that support, then I still expect that we will teleport down to the weekly. And considering the daily is halfway finished right now and bulls have done really nothing so far, I don't expect too much. We might get a little spring off of this, a little bit of hopium because we've sprung off of it, you know, a couple times in the past. And that would not be abnormal, that would not negate my bias at all. What I'm going to need to negate my bias is a spring that reclaims the sort of mid-range and puts us back trading up here instead of down here. So if we can start trading up here again, then of course it's very, very plain that that would be some kind of macro reversal, right? If you're putting in some sort of range reclaim, then we can start moving up. But until that happens, you've just got this headed toward the weekly. So be careful of bulls right now. Don't just be like a giga bear. I'm not like bearish no matter what or anything like that. So be unbiased. If the trend changes, then it changes, and great, we'll go long instead of short. It's that easy. You just click the green button instead of the red one on your leveraging interface and you make money. So if we can start to go up, then that's great. I don't care either way. I'm basically sidelined. I think most people are going to miss, like, there's a lot of talk about volatility entering the market, and honestly I don't really see any sign that volatility is going to enter the market anytime soon. There's like nothing that's changed on the volume or anything like that. It's kind of tapered off a little bit, but there's nothing to show that we're going to just like do this or do this. Eventually that will probably happen, and a lot of us will get left behind on the big meat of a move, but that's not as important as not losing anything. You want to have the maximum amount of capital that you can to grow when the trend becomes clearly reversed, and until it is clearly reversed, there's no chance that I'm going to be just making a big spot buy or a big leverage long. I don't mind to dollar cost in as long as we want to go down. I don't mind to dollar cost in even if we have a little spring that fails. So that doesn't bother me at all, but I don't want to be taking a big position, trying to knife catch, trying to catch along. If you are a risk-reward trader, then yeah, that's your level on the daily, but I don't think, given that we've already been at this level several times, that we're really going to see too much out of it. I think that it's not a great risk-reward in any way other than, well, it's a support. So I don't think it's any more important than, you know, this support was that we lost earlier, or that this support was that we lost. You know, there are so many places that you could have taken the risk reward trades, and so far they've all broken down. So it's not interesting to me to really be speculating here. There's no reason to speculate when we can instead just wait a couple days and have facts to guide us. And the facts that we want are some kind of close in this yellow area. We want to move back up, ideally above the black line at point of control, because we just have this topping us out right now, and there's nothing new, there's nothing fundamentally different today than there has been since 3 weeks ago. So if we don't teleport down, I'll be very surprised. But as far as crypto Twitter goes, I see a lot of sentiment. Like yesterday was very bearish, and then today everyone says they're going to spring off of this support, and then tomorrow, depending on how it closes, the sentiment will change again. But yes, overall, I will be very surprised if this holds. I do not expect it to at all. There's basically no reason it will. At this point, you got to ask, like, where do people want to buy? Because before, people wanted to buy here, and now we've seen that people want to buy here, right? They want to buy lower. That's where the big buying support came from. So people don't want to sell here necessarily, but they want to buy lower. And if they think they can buy lower, then they're going to sell and try to get things cheaper. It's pretty much just how the market works. That's how spot market works, and we're in a spot market right now. So no one's going to come in and be in a rush to buy this when we've already been here so many times that it's done nothing for them, right? Even if you bought the bottom of this body and sold the top of this wave, you made like 13%, which is not nothing, but in crypto, in Bitcoin, 14%, something like that. That's not the wave you're looking for. That's not your generational wealth or whatever. It's not your get-rich-quick scheme to make 15%. So I think people are going to be looking for a lot bigger discounts. And this is a very unappealing level as someone who wants to be bullish, wants to understand the bulls, to just see that, you know, this is a trend, so why would I buy right here? Like, why would I want to buy right here with no sign of reversal? We need something coming up toward here for me to really be like, oh shit, it's on, like, this might be it, maybe we're going. But that sort of like excitement is it's not on the board, not for me anyway. So it's just, it is what it is. The bans don't mean anything right now. It would be, you know, it's one of those calls where if you're wrong, you just say, well, the bans don't always matter. And if you're right, you say, see, I told you so. But right now, again, to go back to the weekly, yes, we're basically in this old range, as everyone sort of expected us to be. But unlike that old range, to summarize what I said earlier, you're in a very tight little zone here. Most of our price action has just been around here, and that should be very, very scary for everyone. And now we are doing our best to lose that. We're heading toward like the weekly, the higher weekly support as a candle body, but it's only Wednesday and we're already like hammering the shit out of the support. So I don't really expect to have this high time frame downtrend, and then on a random Thursday we just shoot a giant green candle. Like, it's probably not going to happen. And we know the buying pressure from the bottoms of these wicks. We know it's down here, so that's still where I'm going to be looking. I think altcoins are starting to reflect Bitcoin more, in that if Bitcoin has just like the slightest chance of a pump, the altcoins are pumping a bit. Not like AXS tier pump or anything like that, but if you look at something like Doge, you can ignore all my marks, but like today people start talking about, oh, Bitcoin's at support or whatever, so you get like this little 8-hour pump and then it sort of starts to fade away, and I don't expect it to be too much in any of the alts. They all kind of look like this. They're all sort of beginning to mirror one another, or they already have been mirroring high caps for a long time. Not, of course, like 10 million market cap bullshit, but the majors, they all look sort of the same. So don't want to ramble too much. I'll cut it here because we already talked about everything Bitcoin. So my bias is unchanged. I still see no reason to be bullish yet, but if I'm going to be bullish, that's what I need to see. I need that like 35 or at least like 34.6 to be reclaimed and start a move up toward a higher level. If you have a different idea about what might constitute a bullish chart, I would love to see it. If you have a request, feel free to send that to me on Twitter or on YouTube or DM, whatever you want to do, whatever works for you. I'll take your request, and I do promise I will get around to those when I'm feeling a little bit better. Otherwise, thank you very much for coming by, and best of luck to you in your trades. I hope you kill it. Even if I don't, even if you get rich and I was wrong about everything, I'll still be happy for you. So do your best, protect your wealth, and I will see you next time. Thanks a lot.